Hey everyone, I am here with Jeremy Pope. Hey Jeremy.
Hi, how are you?
I'm great. How are you?
Great, great.
Great. And Jeremy is one of our favorite lending partners. He's with PRMG. And Jeremy, one of the big questions that we're getting a lot is we have a buyer that maybe comes and they've already spoken with their mortgage or their bank or whatever, and we are recommending that they talk to a couple of our lender partners.
Right.
And they're confused, like, aren't all banks the same? Like, why should they do that?
Well, it's there's a big difference between interest rates and how much you might potentially spend that you don't need to be spending
Okay.
over that life of that loan. All banks will structure themselves a little bit differently.
Mm-hmm.
We've talked about in past videos
Mm-hmm.
about margins, right? So
Right.
not all banks are created equal, and there
Well,
are
we
big
know
differences
that.
out there.
But like, just as a recap, you had said in a previous video that, like, sometimes even though we hear on the news like, oh, interest rates are whatever, that doesn't mean that's the one that you're going to get from the bank or the mortgage person that you talk to.
Correct, correct.
Okay.
Unfortunately, everybody's experienced this in one way or another.
Mm-hmm.
There's some bait and switch going on. So if you go to bank websites and you look up the interest rates, they're going to show you the very lowest interest rate ever. And what the problem is that there is an asterisk there, and
Sure.
most people don't read it. For example, 760 plus credit, 30% down, $450,000 house in Texas only,
Right.
and then you get this rate.
Only if you apply on a Wednesday and it's
Right,
sunny
right. It's
outside.
got to be
Right, right.
sunny out, and yeah, yeah. You got to have a green car. Yeah, yeah.
Exactly. Well, I know that a lot of our clients or potential clients that have then taken the 10 minutes to talk to you, they're actually getting a lower interest rate. But can you, like, walk us through an example? Like, what does it really mean? Because it's low anyway.
Sure,
So, like,
sure.
who cares?
That's a lot of people are looking at it as whatever. What's
Yeah.
three versus three and a half? Well,
Right.
it is a big difference.
Okay.
The real life example that I can provide is, let's suppose you wanted to buy a $250,000 house
Great.
and you wanted to do a 5% down conventional loan. Seems to be kind of the crowd pleaser with us.
Well, yeah, I mean,
Everybody likes that,
that sounds great. Because
right?
before,
Get
I mean, I would think you would have to put, I mean, I know 10% was a lot, or even like 20% down, which that's a lot of money.
correct, correct.
Yeah.
5%
5%'s
down
better.
is 5% down is very unrestrictive. We do have a 3% down. There's certain there's additional qualifications. So
Okay.
5% down, almost anybody can get,
Okay.
and you don't have to have mortgage insurance.
So
So it's
5% down on a $250,000 house is 12.5.
$12,500,
Okay.
correct. So you want to buy the house for 250 and your down payment's 12,500. That's where I come in. I bridge that gap. So
Okay.
you get a loan for $237,500.
Okay.
Okay. So right now I'm seeing rates in the twos on 30-year mortgages. So what I want to show you is the difference between 2.75 and 3.25. It's
Yeah,
a
it doesn't
half
sound
of a
like a
point.
lot. It's a half a point. You're like,
No,
it's still low.
a lot of people would have that first conversation with a bank, hear 3.25, get all excited, and
It's
then they just,
exciting.
yeah, where do I sign? And
Yeah.
they don't realize that they can do even better.
Okay. Let's
Okay.
hear it.
So that 2.75, and we'll stick to this 9-year plan of use of people staying in homes. That's the
Okay.
new study that's been sent out. Was 7. Now it's more like
Our
9.
asterisk is you should move more.
Right.
Let's
Scroll down
let's
for the
like
asterisks.
stop
Right.
there. But yeah, okay. So we'll just keep it at the average, right? The current average of nine
Sure.
years. Got it.
Sure.
Okay.
So that $237,500 loan at a rate of 2.75, you would spend $52,000 in interest over 9 years, the first
Okay.
9 years of the loan.
Okay.
Okay.
Because that's because
But
a lot of the interest it's front loaded.
yes,
Okay.
yes. Banks know most people aren't staying in homes 30 years,
Yeah,
so
they're
they
gonna
try to
move.
get more of their money up front.
I
Right.
get it.
Correct.
Okay.
If you said, if you didn't talk to more people and you went with that 3.25 interest rate, again, it's only a half point difference, doesn't sound like a lot, but over 9 years, that's 63,000 in interest.
Oh,
It's
so that's
$11,000.
$11,000. Yeah, that's a lot.
It is a lot.
I mean, that's
It is a
almost
lot.
another down payment for another $250,000 house.
You're correct. You're
You could buy
correct.
an investment property, Jeremy.
Very good. Very good. Yes, perfect. If you break that down to a monthly amount, it's about
Okay.
$100 a month. So, $100 a month for your 401k or your credit cards or your kids' college fund.
Yeah.
That'll help.
So we're
That'll
not getting
help.
an investment property
Right.
anymore?
Or an investment property. Yes, yes. So why throw it away? Why?
Yeah, like why give it to somebody else in lieu of, just simply having like a 10-minute conversation with another banker to see
Correct.
what they can
Correct.
get. Now, let
Te-
me ask you, why are you lower than other people? Like, what makes the difference?
It's just how we've structured our branch. So
Okay.
I'm a branch manager, and my corporate office gives me the ability to set our own margins.
Okay.
And we've kept that low. We keep the overhead low so that we can give better loans. Because at the end of the day, service matters,
Mm-hmm.
but the rate really matters.
Right. Everything does. Yeah. And with you, they get both service
Yes,
and a
yes.
good
Thank
rate.
you. Thank you. That's
Yes.
correct. That's correct.
Yeah, that makes sense. So maybe like some of the branches that are maybe a little bit higher interest rates, they may have like more overhead, basically,
Sure.
like more
They're
staff,
throwing more happy hours. So who's paying for that? Right?
the customer. So I guess the
Exactly.
the big thing I learned here is, I mean, a half a point could be equal to $11,000. I'll
Yes.
take my $11,000 and keep it.
Correct. Correct.
I
Very
like it.
good.
Well, I
Very
really
good.
appreciate you coming on. Thank you so much.
Of course, anytime.
Have a good one.
Thank you.